Monday, September 25th, 2017, Monaco 64, home of alternative economics and contrarian views. So I like to do an early market update this morning, and I would like to talk about the health of the big U.S. banks like JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America. There's a lot of talk that they've done really well, they've recovered, they've sorted out their act, and the European banks, on the other hand, haven't. And that includes Citibank as well, of course, or Citigroup. And to do that, I'm going to look at one of the chapters in this little book, which I've used before, like as a snippet, a pocketbook of gold. And it says, A Survival Manual for Monetary Mayhem by James E. Sinclair and Peter D. Carlin. So before we get into that, let's look at what the markets are doing. It's just before 9 a.m. London. Gold is down $5, $12.92 basically. The range has been $12.89 to $12.98.50. Silver, $16.90, down 8. Range has been $16.87 to $17.03. As I look at it right now, we're holding the 50-day moving average, which is just around $12.90, or just a little bit below in gold. And all we're doing, I think, is consolidating right now. It's forming maybe a little flag, which normally wouldn't be positive. We could see gold go down in the next few days, after this little consolidation, because we've had a downward trend in the last 2 weeks. So we'll have to wait and see whether we hold this moving average. But really, we need to get back above 1,300 for gold to probably be out of the woods. So what else is happening? We got the Dow down 16 points, so nothing really to write home about there. 22,328. S&P trading at 24.99, down at 1.5. Crude oil, WTI, still above 50, down 20 cents, but at $50.50. The pound has recovered a little bit, but it's come back down now. We got up to 135.70 this morning. We're now at 135.16, up 20. Many of you might not have seen, but late on Friday, after the U.S. markets closed, Moody's downgraded the UK debt, and the pound actually dumped quite aggressively. So I guess the Bank of England must have been in there this morning trying to control the fall, and that's why we rallied. But right now it's coming back down. The euro is down 45 pips. Some people are saying that's because of the German elections. Merkel's party had the most votes, but they're going to have to form a coalition, and the right wing or far right party, AFD, did really well. So the euro is at 119.03, down 43. I just still think the euro is positive. I would ignore all this talk of politics. That people have to have a reason. A lot of times you look at the stories in the financial press, in the mainstream media, they say, the DAX, German stocks drop on the back of elections. But you look at the DAX right now, it's up 14. And the euro, if they say euro gets whacked, but it's only down, 1/3%. Dollar yen, I saw as well that the Japanese Prime Minister is called for a snap election in the lower house in Japan. He announced that he's going to call for a dissolution of the lower house, and he's going to have snap elections. Dollar a little stronger against the yen, up 26, 112.25. Range has been 111.95 to 112.53. So that's one of the reasons why also gold's been hit a little bit. So now let's go back into the health of U.S. banks. For example, there's a story, where is it? It's from 12th of July. It's on CNBC, and it says, post-crisis, U.S. banks have recovered while their European peers are still looking for ways to survive. But let me tell you one story here, you know, and I knew when this came out because I was, you know, I worked in the city and I follow these things because they're important, of course. And this is to do with accounting. And I'm looking through here, through this book this morning. I found a section, because I read this book, you know, years ago. It was published in 2010, and you forget everything. But I saw here on page 19, FASB and FASB and mark to market. So what does FASB mean and what does mark to market mean? Well, mark to market, I'll start with that, is at the end of the day, you know, if you work in a bank or in a brokerage house, you now it's all done electronically, of course, but you used to look. I remember when I started out in Switzerland, at the end of the day or the week or even the month, we do a report for clients to see where their portfolio was, and you had to look at the closing price for all the securities they had and change it in the system. So you mark that to the market, you know, where the market closed. And that's how things used to be done before, you know, FASB, which stands for Financial Accounting Standards Board. That's how it used to be done for all the OTC derivatives, you know, which were more than a quadrillion or 1,000 trillion, you know, at the height of the crisis, you know, internationally, U.S. international banks and the European banks, the City of London banks. And then they, you know, I read here. Now, I'll expand on it later. It says, accounting methods are what establishes the belief that we are not being lied to and can trust a company's accounts. These methods have been compromised and trust violated. Trust, once violated, is not easily restored. One of the more glaring methods used to deliberately distort accounting standards so as to mask a dire economic situation has come via the Financial Accounting Standards Board, or FASB, as it's commonly known. FASB is a private non-profit organization supposedly helping set standards in the world of accounting. Somewhat worryingly, the Securities and Exchange Commission, or the SEC, the people asleep at the wheel while Bernie Madoff and others ran riot, defrauding people of billions, designated, and this is in quotes, that's from the SEC, designated the FASB as the organization responsible for setting accounting standards for public companies in the U.S. And then, you know, the authors go on to say, talk about the blind leading the lame. And then he goes on to say, the authors go on to say, although the changes to FASB's fair value accounting rules sound complex, really they are very simple. Instead of demanding a true mark-to-market evaluation for semi and totally illiquid over-the-counter derivatives, OTC derivatives, FASB, at the bequest of the large banks, there you go, the large banks, the too big to fail, has consented to allow them to make up whatever numbers they want. So it's called now mark to model instead of mark to market. And that's the same thing that the BIS, or the Bank for International Settlements, has done with their accounting for all the derivatives in the world. They value it now at 600 or 700 trillion because they use mark to model. They're not using mark to market. And so even the BIS is involved in this shenanigan. So he goes on to say, this means that the true financial health of leading American banks can be cloaked behind artificial numbers. Securities for which there are no markets and which may have severely depreciated or no value are carried on the company's book at whatever value they themselves determine. Unsurprisingly, the banks have called the changes to FASB methods a good decision. And it goes on to say, in a statement of outstanding irony that any intelligent person would call sarcasm. The chief executive officer of the American Bankers Association said, changes, and I quote, should improve information for investors by providing more accurate estimates of market values. Wow, that's crazy. So that's what I wanted to bring up from this little book. And I'll keep bringing snippets from this book, as I promised earlier in some videos ago. Just goes to show, so what is actually happening? This is analogous to you going to your doctor, having a blood test, and the doctor finds out that you have a condition, and then you tell the doctor, no, let's forget about it, you know, maybe for health insurance reasons, you know, why don't you just mark my test to model? Basically, I expect to be totally healthy. That's how a human body should be. So mark my test as perfect. And then the doctor says, oh yeah, right, we'll do that. That will give a much better indication of your health. And that's what FASB is doing. And the regulators, the SEC, they're allowing that to happen. So it's quite incredible that the banks have been able to do that. But I haven't looked into like who, you know, it says it's a non-profit organization, FASB, but I'm sure they get a lot of funding from somewhere. I would, you know, I wonder where they're getting their funding from. So that's what I wanted to talk about. When you hear in the mainstream media, CNBC, on Bloomberg, how U.S. banks have completely turned it around, well, that's one of the big reasons why, you know, the change in the mark from mark to market to mark to model. So they've been able to basically lie about the value of hundreds of trillions of derivative securities. Not securities, but derivatives, OTC derivatives. So that's it. If you enjoyed this video, please like, share it, and also subscribe to my channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.